If we look at all the major corrections in the market in this century, all of them began in either January or February. And that is the big reason why I'm not going into this market right now, at least not until I see how the first quarter plays out. See, you have to realize that the only reason why Nifty has not corrected by 25% instead of the 12% we see right now is that the IT stocks have stood strong. And the IT stocks have stood strong because the global investor community believes that the US will not go into a recession. Odds are though that the US will go into a recession, especially with the Federal Reserve coming out and saying that they will not be cutting rates aggressively. It is very likely that the US economy will suffer over the next 2 quarters. Now, it is not news to any of us that the Indian IT stocks are heavily dependent upon the US economy. So is our auto sector, so is our chemical sector, and even banks to some extent. So if the US economy goes into a recession, we will suffer. And here is a chart to prove that US economy is in fact headed for a recession. This is the US leading economic indicators chart shown in blue, and then the rectangles in grey show us the recessions that have happened in the last 55-60 years or so. Now you'll notice that this blue line, which as you already know if you've been watching my channel, the leading economic indicators are essentially a bunch of different metrics that are taken from the economy. It would include housing purchases, car purchases, credit defaults, and a bunch of other things that show how the economy is doing. Usually, this line predicts the economy's behavior about 6 months in advance. And if you notice, we've had a few dips in this, a few large dips in this line over the last 55 years. We have 1, 2, 3, let's say 4, 5, 6, 7, 8, and 9. And barring this 9th one, which we're living right now, every other time this indicator has dropped heavily, we have had a recession. And the deeper the dive, the bigger the recession. So this time around, given that this dive is bigger than what happened in COVID, I expect us to hit a big recession in the US. Note, in the US. Now, I don't believe that India is going to go into a recession because we're a developing economy. If we go into a recession, there would be riot on the streets, the government would collapse, and it would be mayhem. So that's not going to happen. And that has in fact not happened since the 1980s, with the exception of the 2020 COVID crisis. But of course, that had nothing to do with the economy itself. So even without our economy going into a recession, we've seen the market correct by 40% multiple times. So what I'm trying to tell you is, don't think that just because we don't go into a recession, our market would not crash by 30-40%. It's happened multiple times in the past, and in all likelihood, it's going to happen this time as well. In that case, the IT stocks, I believe, would suffer the most. In fact, I've conducted a quant analysis of how the IT stocks perform in recessionary cycles, in Fed rate cut cycles, and the results are not good. If you want to watch that video, please subscribe. It's going to be dropping in soon. I'll see you next time.